welcome to 4 Minutes, proudly brought to you by Bennelong Funds Management. This week we look at online advice and the apparent lack of guidance for financial planners in terms of liability. As for Chief Pauline Vamos points to difficulties regulators face in developing guidance for phone and online advice.
While online advice is now started to be delivered by a lot of advisors as well as superannuation funds, there hasn't really been enough examples that the regulator can look at to assess whether or not there are issues in its delivery. Traditionally, it is very hard for the law to keep up with technology. We see it in all facets of life, and it's no different in the financial services industry and in the delivery of advice. Consumers want things now. Technology meets those needs now. The law is often 2, 3, 4 years behind, and that's why they're always playing catch up. And that's why it's important from a regulatory point of view that the regulator is able to fill the gap that the law will create.
Also on our front page this week, the industry questions own occupation TPD phase out as part of Stronger Super. And in our top story by Mike Taylor, Wealth Insights research found advisor sentiment took a nosedive as market volatility and regulatory uncertainty take their toll. In other news this week, the government has released the second tranche of its FOFA legislation. The changes include a ban on volume-based shelf space fees, a ban on offshore conferences for dealer groups, and a limit of $300 on soft dollar benefits for financial planners, among other changes. Prime Minister Julia Gillard spoke at an industry super network event last week, where she praised the ISN chief David Whiteley for his support on securing the opt-in policy and getting rid of conflicts of interests in the financial services industry. AFA Chief Richard Klippen has expressed concern about Gillard's speech to the ISN, calling on the PM to outline her real FOFA agenda. Meanwhile, the ISN has turned to research generated by its own chief economist to claim people would be better off putting their money in the bank than into a retail super product. The FSC responded by claiming the ISN data was misleading. APRA has proposed the new superannuation fund standards, which will see super funds follow stricter governance arrangements, although still falling short on many of the obligations imposed on the publicly listed companies. As for claims, financial planners need to have appropriate protections under the new best interest test to ensure they are not unduly exposed to vexatious litigation. In its submission to the Treasury, ASFA stated planners should be able to scale advice with a degree of certainty. And a SPA survey found while most SMSF professionals believe FOFA will increase the quality of advice, only 14% believe it will result in the greater uptake of advice. ANZ Wealth has recruited former NAB MLC staffer Raylene Seals as its new head of advice delivery. And finally, Guardian Financial Planners will start offering free statements of advice for risk insurance to advisors in a bid to help planners focus on servicing their clients. For all the details on those stories and more, see tomorrow's issue of Money Management and visit our website. Thank you for joining us, and I'll see you again next week.